All right, Zach, I'm excited to have you on today with me. I really wanted to do a market update. I want to know what the Utah current market condition is from your perspective as a lender.
I mean, as far as what we're seeing in the market right now is sellers are being very negotiable. In terms of purchase price, sometimes we're able to get them to come off of the purchase price a little bit. And we're also able to get seller paid closing costs right now. So on almost all of our deals, we're seeing anywhere from like 2 to 3% on them. And so that gives the client a lot of ability to pay for like an interest rate buy down, or they could even do a 2-1 buy down, like a temporary buy down where they buy it down 2% the first year, 1% the second year. And typically we're expecting to refinance it during that 24 months. So that way they never have to deal with interest rates in the sixes. And so as far as what I'm seeing, it's a good time to get in.
Yeah, so that's what I really wanted to talk about. Why should I get in the market right now at the end of the year? And if I do, what kind of interest rate can I expect? What does that look like in terms of my payment? Tell me the bottom line. Convince me, like, why should I buy a house right now? Well, what's an example of a client that you're working with right now?
Yeah, so right now we've got a client in Orem. He's moving from a townhouse in Vineyard, purchasing a single family in Orem. He's really excited. He's like, hey, we're finally gonna have that backyard. We're gonna have that for the dog and different things like that. And so as far as him making that move, it's a good time for him because he's able to sell his townhouse, because for me, at least what I'm seeing, townhouses are moving pretty consistently right now. It's kind of that first time home buyer, 3-bedroom, 3-bath kind of a place. And so for him to sell it, it's pretty easy. And then for him to move into the next house, of course his payment's going up a little bit, but likely it's gonna be kind of a two-part with him where he buys the house, gets a really good purchase price on it, and then he's likely going to refinance it, get out of the 6s, get into the 5s, maybe even the 4s over the next 24 months, something like that. It's a good thing. I think for him especially, we're going to be doing that 2-1 buy down that I talked about before with him. So he's starting out at a 4.5% that first year, then goes to a 5.5% the second year, and then a 6.5% years 3 through 30. And so it really makes it palatable in terms of payment, because if we look at his townhouse payment versus what his payment's going to be the first year, maybe only going up $300 to $400. It makes it so that he's able to take that step without feeling it all at once.
Yeah, so, okay, this is the way, tell me if I'm wrong, but this is how I like to explain it when my clients say, but what is a 2-1 buy down? Like, what does that even mean, right? A 2-1 buy down means that it's like a piggy bank. This is what I love most about this program is that, first of all, if I understand right, the seller has to give that money and it's put like in a piggy bank, let's call it. Like,
call it a piggy bank.
It's prepaid. It's just prepaid. So they put the money in the piggy bank. And so the difference between, let's say today's rate is 6, let's pretend that would be awesome, but let's pretend today was 6. So the first year it's at 4. Every month that supplemental money between what the payment would be at 6 and what it currently is at 4, the difference of that is going towards, from that money from the seller, it's being pulled from the piggy bank and it's being paid. So that's happening each month until you either hit your 1-year mark and then it goes up to 5.5%. So then they're pulling a little bit less money, or
Right.
you hit your 2-year mark and then you're hitting your permanent for the rest of the life of the loan. In this example, you would be at that 6. The rest of your loan, remaining 28 years, would be at that 6%. That piggy bank money would be gone because you used it all. But let's say that all of a sudden a year from now, the rates have gone down and the buyer actually wants to refinance. Whatever is left in that piggy bank that was contributed by the seller that's sitting there to do that buy down could actually be used towards reducing the purchase price or funding the cost of the refinance. Is that accurate?
Yeah,
Okay.
So that's the thing I love about those temporary buy downs like you're talking about, where if we don't use all of that piggy bank money, it comes back to you. And so that's what I'm really focusing on right now is if we can get the seller to contribute that 2 to 3%, let's definitely put it in a temporary buy down, because whether we use all of that money or not, at least you get the full benefit of it. And if we end up refinancing before you're able to use the full piggy bank, it just comes back to you, which is great.
And that's why I love it too, because a permanent buy down, if you go to refinance, like it's lost.
It's the sunk cost. You're not going to get any money back.
Not getting any money back. So that's why I like this other option better. So right now I'm working with several clients. Like this is the other benefit I see of making the move right now. So they have homes to sell. So they are sellers and buyers. They're trying to like line it up, which is kind of magical possible for you to be able to make that work. But in today's market, we're making it work. We're getting them from their current home into their new home, and we're using all this fancy negotiation. When the market picks up and people flood back into the market, because the truth of the matter is we still don't have enough houses for buyers, that's not going to be a thing anymore. You're not going to be able to negotiate, hey, Mr. Seller, not only do I want you to give me all this dough so that I can do a 2-1 buy down, but I also want you to wait until I sell my house, and then I want to move in when I want to move in. And it's kind of magical right now. So 3 different clients are doing that move, and it happens at different paces. One of them, they did a new construction. When we sold their house, they just barely got keys. Just this week got keys. The other one, we're in mid drama because there's always stuff. There's always stuff that comes up. That's why you need a professional who can keep you calm and keep things moving. We had stuff come up on appraisal and inspections, and on both sides, on the house we're purchasing, on the house that we're selling. For us to magically be able to get that lined up, we're right in the thick and thin of it, and I think we're going to need an extra week, but by golly, we're doing it. And then the other ones, we're still just hopeful because we just secured our purchase and now we've got to get their home sold. So that is an actual possibility in today's market, which fast forward, I just don't see that that's going to happen if the rates come down like they're predicted to come down and buyers get off the fence. They're jumping back into the market. The elections are over. All the waiting is over, and it's not going to be the same opportunity for everyone to make that move like they want. Do you agree?
Right. Nope, I agree. Because before, contingencies during 2020 to 2022, you were not buying a home contingent upon selling yours. The seller would get that offer and they'd kind of laugh and be like, well, I'm glad they submitted this, but we're not even taking this one seriously, right? We're just going to put this in the reject file.
Right.
And so I think that it is kind of a perfect storm right now. And it's partially being created by a little bit higher interest rate, but that's a short-term piece that can easily get fixed over the next couple of years as the Fed continues to bring interest rates down and everything like that.
So I want you to help me because I'm not the numbers gal. Let's kind of do a pretend scenario. Let's say that, and in fact, we have a buyer right now and he qualifies for right around 500,000. So let's base this on buyer gets pre-approved. They're pre-approved for 500,000 and they're going to do some different scenarios with down payment. So let's say 500,000 is their purchase price. Let's put the taxes, just to make it easy, at $2,400 a year. And then the homeowners insurance, I think that a good guesstimate would be $900 a year for homeowners insurance. What rate would you quote them at, and what would their payment look like? And then give me the different down payment scenarios.
Yeah, so I'm just going to assume, it's a case-by-case thing, of course, but let's just assume they have good credit. We're going to be going with a conventional loan. They're probably getting in the low sixes is what I would assume right now. Anywhere from maybe a 6.25 to 6.375 is kind of that range that I'm seeing. Granted, we hope it gets better and it kind of dips down into the 5s again, but we're looking at it right now. So if someone were to put it down about 3%, that monthly payment on a $500,000 home is probably going to be around $3,400 per month. Now, if they put 5% down, it goes down about $100. Too much, really. You're probably around $3,300. So we've got a lot of clients right now specifically, they're saying, hey, let's just do the 3% down because that's what we have saved up right now, and that's what we can use. To take the time to save up that extra 2% might put us into the new year. So let's not worry about $100 difference per month. Let's just go now while it's a good time and we're still able to get those seller paid closing costs by the seller. And then let's just say somebody were to do 20% down, that payment's probably going to be coming in right around $2,700. So that kind of just gives a good ballpark where it is.
That's great. And I love that. Those are great. But what about someone who doesn't have a down payment? What about someone who's a first-time buyer? Is there an option there? Right.
So first-time buyer just means you haven't purchased within the last 3 years or owned a home in the last 3 years. So the nice thing is somebody could have bought a house 5-10 years ago. They then moved out, became, rented for the last few years. And now they're saying, hey, I want to get back into, home ownership. If they go that route, likely we're going to go Utah Housing. And Utah Housing, there's a few different qualifications in terms of income and a few other things, but they're pretty good. It's an FHA loan where you end up getting the down payment in the form of a second mortgage. And so that 3.5% that you typically need on that FHA, you just say, hey, look, we need the second mortgage for it. In terms of payment there, you're probably closer to $3,700 to $3,800 per month if we don't have any down payment. but that can still be a really good option, depending on what you're purchasing and what
So
kind of
actually,
negotiation
I
you
mean,
can do.
and that it is what it is. Like I always tell my clients, like it's better to get in a home, even if that means that you're not in a single family. If you're in a condo or a townhome, if this is your first chance, like get in, build the equity. You can move up, but the best forced savings is a mortgage, like having a house payment and then waiting the time, because then you'll build the money so that you can make that move to something a little bit different down the road. So always a good option, even if you don't have a down payment saved up. Now, I will say the caveat to that. I've had some clients come to me and literally think that that meant that they only needed $0.00. That is false. That is false. You cannot buy a house with $0.00. You at least need your earnest money, which you might be able to slide with $1,000 or $2,000, but people are expecting a little bit higher earnest money these days. They like to see 1%. Not everyone does 1%. Like I said, you might get away with $1,000 or $2,000, but you got to do something there. And then you need to do your homeowners inspection. You can opt out of that, but that is bad advice. I would never advise that someone not do a homeowners inspection, and that's going to.
And how much do those typically cost, Janet? What are you seeing on that side of things?
Anywhere from $350 all the way up to $1,000. It depends on which inspections you want to do. And then the other expense is the appraisal, because that needs to be paid up front. It's a service that needs to be paid for. And what are those running these days?
Anywhere from like $525 to $575 is what we typically see.
Yeah, so you add it together. I mean, I tell my clients, be prepared. If you have $3,500, we can help you get a house if you qualify for that Utah housing program. So, right. I mean, pretty spectacular, pretty amazing that that's a possibility. What happens every year at the end of the year? Why would you and I both say people should buy during this time of year?
Because everybody takes it off, right? Like any buyers that we've been helping for the last few months, let's say somebody came to us in the middle of summer's like, hey, I'd like to get in. And for whatever reason, they just don't find the right house that lines up with them, whatnot. Typically, they get fatigued once we hit this middle of November. And they kind of say, well, look, Thanksgiving's right around the corner. And I've got parties to go to. I've got this and that. And then they kind of just check out from, I would say, like November 15th all the way until January 1st. And so it's almost like a cycle where it's like, okay, who's going to check out and who's going to stick with to say, hey, let's actually keep looking at homes during the holidays.
Well, and who does buy during that time? It's the rich people. It's the super smart, savvy, money-making people. And they review their portfolio and they're like, hey, and their accountant says, hey, so-and-so, you need to invest in another house so that you can offset some of your taxes. So we all know that the market caters to those type of people, right? So end of year, it always feels like there's a little bit of a surprise little interest cut. And the negotiations are always way, way better, because if you're willing to do it when no one else wants to, when it's snowing, when everyone else is just being cozy with their family and they're traveling, but you're out there looking for a house, you're rewarded. I've seen it year after year after year. And the crazy thing is that regardless of what you and I know, the majority of the people are still going to take it off. They're just going to be like, I don't care. I'm just going to wait.
Well, I look at it from the negotiation side too, and I see, well, when sellers start to see showings decrease, right? Maybe they had 10 showings last week and now they have 2 this week. They start to panic a little bit and say, wow, why are the showings going down? What's going on? Is there something wrong with this or that? And it's nothing to do with that. It's just the motivation and people making the time for it. So I really like the idea of, the next 6 weeks is a really good time to negotiate a good deal.
Yeah, I agree. And, going into the new year as well, like as long as you're in motion, November, December, you're out there in motion, even if you're not going to get keys January, February, you're still ahead of the curve, because once everyone comes out of the holiday coma and says, hey, let's get back to business, you're going to be just that much further down the road and have secured a better negotiation. I think that is true. It has been year after year. And I will say that especially everything I've heard from my coaching advisors, they are saying this year especially, there's been some crazy stuff happen this year. And now that elections are over, they're saying that some of the activity that hasn't happened that typically happens in that spring and summer is happening right now at the end of the year. So it really is great opportunities right now. We'll get together and we'll talk again about our predictions about next year. But for today, I appreciate you breaking down payments. I know that's really important to people, helping them understand the 2-1 buy down. It's a great tool right now, which I know there's others. We could talk about different grant programs. We could talk about, there's other things that we can do as well, but I appreciate you breaking that one down. Just parting wisdom. Is there anything else, any other really good hints or advice that you could give?
Yeah, biggest one is like the smart money is really buying in the next 6 weeks. I'm helping a couple different investors that are saying, okay, we've got to tie down a property between now and the end of the year for tax benefits and different things like that. And so I'm looking for them every day saying, okay, what's penciling out? What's penciling out? And so those are fun things to do. Let's not get lazy over the next 6 weeks because this is really the best time to get the best deal.
Well, thank you so much for your time today, Zach, and beautiful insights. Thank you so much.